Today we are diving into some of the biggest investment opportunities of the next decade. These are some companies that are not just growing but dominating their industries. In this video I'll reveal 3 companies with massive upside potential. We'll explore a leader in digital sports entertainment, a global tech giant, and a pioneer in cybersecurity. These companies have strong fundamentals and clear growth paths. If you're ready to discover high-potential growth stocks, you're in the right place. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Now, let's get into it. Let's dive in with DraftKings, ticker symbol DKNG, a company that has rapidly become a household name in the world of digital sports entertainment. Founded in 2012, DraftKings began as a daily fantasy sports platform, but has since evolved into a multifaceted leader in the online, gaming, and sports betting industry. Today, DraftKings is not just a platform for fantasy sports enthusiasts, but a major player shaping the future of how fans interact with their favorite games and teams. The landscape of sports betting in the United States has changed dramatically in recent years. With the Supreme Court's decision to overturn the federal ban on sports betting in 2018, a wave of legalization swept across the country. DraftKings was perfectly positioned to capitalize on this massive market shift, leveraging its early mover advantage and brand recognition to quickly establish itself in newly opened markets. As more states continue to legalize sports betting, the potential for growth remains enormous. One of DraftKings' greatest strengths is its ability to leverage its existing daily fantasy sports user base. With millions of engaged users already familiar with the platform, DraftKings was able to transition seamlessly into the sports betting market. This loyal customer base provided a strong foundation for growth, allowing the company to cross-sell new products and services with minimal friction. The community aspect of fantasy sports also helped foster a sense of loyalty and excitement, making users more likely to try out DraftKings' expanding suite of offerings. As the regulatory environment continues to evolve, DraftKings has demonstrated an impressive ability to adapt and expand aggressively. The company has launched operations in dozens of states, often being among the first to market when new legislation is passed. This early entry allows DraftKings to capture significant market share before competitors can establish a foothold. Their marketing campaigns, partnerships, and local activations have made the brand a familiar presence in cities across the country, further solidifying their leadership position. Brand recognition is a crucial asset in the crowded world of online gaming, and DraftKings has built a powerful brand through strategic partnerships with major sports leagues like the NFL, NBA, and MLB, as well as with prominent media companies. These collaborations not only boost visibility, but also lend credibility and trust to the platform. DraftKings' presence at major sporting events, both on-site and through digital advertising, ensures that sports fans are constantly reminded of the brand whenever they watch or attend games. Innovation is at the heart of DraftKings' user experience. The company offers a wide range of features designed to keep users engaged, such as live, in-game betting, which allows fans to place wagers in real time as the action unfolds. Daily fantasy sports contests remain a core offering, but DraftKings has also introduced new game formats, personalized recommendations, and social features that encourage friendly competition and repeat engagement. This focus on innovation helps DraftKings stand out in a competitive market. From a business perspective, DraftKings is laser-focused on capturing as much market share as possible during this period of rapid industry growth. The company is willing to accept short-term losses in order to invest heavily in customer acquisition, technology, and marketing. This aggressive growth strategy is underpinned by a long-term vision for profitability, as DraftKings aims to become the dominant player in a market that is still in its early stages. Investors should be aware that this approach comes with risks, but also significant potential rewards. The online sports betting market in North America is projected to be worth tens of billions of dollars annually within the next few years. Industry analysts predict that as more states legalize online gaming, the total addressable market will continue to expand. DraftKings is well positioned to capture a significant share of this growth, thanks to its established brand, robust technology, and deep understanding of the sports fan demographic. The company's leadership team is focused on scaling operations efficiently to meet this surging demand. Technology is a key differentiator for DraftKings. Their proprietary platform is designed to provide a seamless, intuitive user experience across devices, whether customers are betting on their phones, tablets, or computers. The app is known for its speed, reliability, and ease of use, which are critical factors in retaining users and encouraging frequent engagement. DraftKings continually invests in improving its technology, adding new features and ensuring that the platform remains at the cutting edge of the industry. Beyond sports betting, DraftKings is actively expanding into new verticals such as iGaming, which includes online casino games like slots, blackjack, and roulette. This diversification helps reduce reliance on any single revenue stream and opens up additional growth opportunities. The company is also exploring the world of digital collectibles and NFTs, tapping into the growing interest in blockchain-based assets among sports fans. These initiatives position DraftKings as a forward-thinking company ready to capitalize on emerging trends in digital entertainment. Of course, there are risks to consider. The regulatory environment for online gaming is complex and constantly evolving, with each state setting its own rules and tax rates. Profitability remains a challenge as DraftKings continues to invest heavily in growth, and there is always the risk of increased competition or unfavorable legislation. However, DraftKings' strong brand, scale, and first-mover advantage give it a competitive edge that is difficult for new entrants to replicate. Investing in DraftKings is essentially a bet on the continued legalization and mainstream acceptance of online gaming in the United States and beyond. The company's ability to execute its strategy, navigate regulatory hurdles, and maintain its leadership position will be key factors in determining its long-term success. For investors with a high risk tolerance and a belief in the future of digital sports entertainment, DraftKings offers a compelling growth story. One of the most promising aspects of DraftKings' business model is its appeal to a younger, tech-savvy generation of sports fans. Millennials and Gen Z are not only more comfortable with digital platforms, but they also seek interactive social experiences when watching sports. DraftKings taps into this trend by offering features that encourage sharing, competition, and community, providing a long-term growth tailwind as these demographics become an even larger part of the sports audience. DraftKings' data-driven approach is another key advantage. By analyzing user behavior, sports trends, and betting patterns, the company can offer personalized recommendations and targeted promotions that enhance the user experience. This not only increases customer satisfaction, but also boosts customer lifetime value by encouraging repeat engagement and higher spending. The use of advanced analytics and machine learning helps DraftKings stay ahead of the curve in a rapidly evolving industry. The company's market cap stands at $17.47 billion, and while it continues to scale its sportsbook and iGaming footprint, profitability remains a work in progress. EPS is negative at 0.65. For 2024, revenue reached $4.76 billion, but the business still posted a net loss of $507.28 million, reflecting heavy investment in customer acquisition, promotions, and product expansion. In summary, DraftKings stands out as a leader in a rapidly growing industry, with a powerful brand, innovative technology, and a clear strategy for expansion. While there are risks associated with regulation and profitability, the company's strong market position, diversified offerings, and appeal to younger generations make it a compelling player in the future of sports entertainment and online gaming. Next we have Tencent, ticker symbol TCEHY, a global tech giant with a vast and interconnected ecosystem that touches nearly every aspect of digital life in China and increasingly, the world. Founded in 1998, Tencent has grown from a simple instant messaging service into a multifaceted conglomerate with interests spanning social media, gaming, fintech, cloud computing, and even artificial intelligence. Its influence is so pervasive that it's often referred to as the Google of China. But in reality, its reach is even broader, given its deep integration into daily life for over 1 billion users. At the heart of Tencent's empire is WeChat, a super app that is far more than just a messaging platform. WeChat combines social networking, payments, e-commerce, gaming, and even government services into a single, seamless experience. For many in China, WeChat is the digital gateway to the world, used for everything from chatting with friends and sharing moments to paying bills, booking doctor's appointments, and hailing taxis. This all-in-one approach has made WeChat indispensable, and it's a key reason why Tencent's core business is built on social and gaming. WeChat's dominance creates a powerful moat for Tencent, providing the company with an unparalleled distribution channel for its services and products. With over 1.3 billion monthly active users, WeChat is deeply embedded in the fabric of Chinese society. This network effect makes it incredibly difficult for competitors to dislodge Tencent's position, as users are reluctant to leave a platform where all their contacts, services, and payment options are already integrated. The data and insights Tencent gathers from WeChat also fuel its other businesses, enabling targeted advertising, personalized content, and innovative new features. Beyond social media, Tencent is the largest gaming company in the world by revenue. It owns Riot Games, the developer behind the global phenomenon League of Legends, and holds significant stakes in Epic Games, the creator of Fortnite, as well as Supercell, known for Clash of Clans. Tencent's gaming portfolio is vast, covering everything from mobile and PC games to console titles and esports. The company's ability to spot and invest in hit games early has cemented its leadership in the industry, and its influence extends far beyond China's borders. Gaming is now mainstream entertainment, and Tencent is at the forefront of emerging trends like esports, live streaming, and cloud gaming. The company has invested heavily in building out esports leagues and tournaments, drawing millions of viewers and creating new revenue streams through sponsorships, advertising, and media rights. Cloud gaming, which allows users to play high-quality games on any device without expensive hardware, is another area where Tencent is investing for the future, positioning itself to capture the next wave of gaming innovation. But Tencent's ambitions don't stop at entertainment. The company is also a major player in fintech, with WeChat Pay dominating China's mobile payments market alongside Alipay. WeChat Pay is used by hundreds of millions of people for everything from shopping online and in stores, to transferring money, paying utility bills, and even investing in wealth management products. This has made Tencent a critical part of China's financial infrastructure, and the data generated from these transactions provides valuable insights for the company's other businesses. Tencent's reach extends globally through its impressive investment portfolio. The company holds stakes in some of the world's most innovative firms, including Tesla, Snap Inc., and Spotify. These investments not only provide substantial income and opportunities for collaboration, but also give Tencent exposure to cutting-edge technologies and new markets. By partnering with and investing in leading companies around the world, Tencent is able to stay ahead of trends and diversify its revenue streams beyond China. Of course, no discussion of Tencent would be complete without addressing the primary risk: regulation. In recent years, the Chinese government has increased scrutiny on the tech sector, introducing new rules around data privacy, antitrust, and content moderation. These regulatory changes have created uncertainty for investors and forced Tencent to adapt its business practices, sometimes at the expense of short-term growth. However, Tencent has shown a remarkable ability to align with Beijing's goals and operate within the evolving regulatory environment. The company has proactively adjusted its business strategies, increased transparency, and invested in areas prioritized by the government, such as digital infrastructure, education, and green technology. As a result, Tencent is now operating in a more stable environment, with clearer rules and expectations, which could ultimately benefit long-term investors. Despite these regulatory challenges, Tencent's current valuation is compelling. The company is trading at a significant discount compared to its U.S. counterparts, such as Meta and Alphabet, even though its growth prospects and profitability remain robust. For value-oriented investors, this presents a rare opportunity to buy into a world-class tech company at a bargain price, with the potential for significant upside as regulatory headwinds subside. Financially, Tencent is on solid ground. The company generates significant free cash flow and maintains a strong balance sheet, giving it the flexibility to invest in new growth areas, return capital to shareholders, and weather economic downturns. Its diversified business model, spanning multiple high-growth sectors, provides resilience against market volatility and changing consumer preferences. International expansion is another key pillar of Tencent's strategy. The company is aggressively growing its presence in gaming and cloud services outside of China, providing valuable geographic diversification. By leveraging its expertise and partnerships, Tencent is able to tap into new markets in Southeast Asia, Europe, and North America, reducing its reliance on the Chinese market and opening up new avenues for growth. Tencent Cloud, in particular, is emerging as a key growth driver. As businesses around the world accelerate their digital transformation, demand for cloud services is expected to rise sharply. Tencent is investing heavily in building out its cloud infrastructure, offering solutions for everything from gaming and media to finance, healthcare, and smart cities. This positions Tencent to capture a significant share of the global cloud market in the years ahead. The company is also making strides in artificial intelligence and big data, integrating these technologies into its cloud offerings to provide smarter, more efficient solutions for enterprise clients. By fostering innovation and collaborating with global partners, Tencent is not only strengthening its competitive edge, but also building a foundation for sustainable long-term growth. Tencent is a mega-cap tech powerhouse at roughly $723.11 billion in market value. Earnings per share are $3.12, translating to a P/E ratio of 25.58, signaling investors are willing to pay a premium for its diversified ecosystem. In 2024, the company generated 660.5 billion Chinese yuan in revenue and delivered 194.07 billion Chinese yuan in net income, massive scale with solid profitability across social platforms, gaming, and cloud services. Investing in Tencent today is a contrarian play. It's a bet on the company's ability to navigate regulatory challenges, adapt to shifting market dynamics, and unlock the underlying value of its vast ecosystem. While the headlines may focus on risks, savvy investors recognize the potential for Tencent to rebound and thrive as the regulatory environment stabilizes and global expansion accelerates. Of course, there are still risks to consider, including ongoing geopolitical tensions between the US and China, and the potential for Chinese companies to be delisted from US exchanges. These factors can create volatility and uncertainty in the short term, but for those willing to look past the noise, the upside is substantial. Tencent's scale, innovation, and global reach make it a unique player in the tech landscape. In summary, Tencent is a tech empire with dominant positions in gaming, social media, and payments, offering a deep value opportunity for investors who believe in its ability to adapt and grow. With its strong financials, global ambitions, and unmatched ecosystem, Tencent stands out as a compelling long-term investment in the ever-evolving world of technology. Finally, we have Fortinet, ticker symbol FTNT, a true leader in the ever-evolving world of cybersecurity. Founded in 2000, Fortinet has grown from a small startup to a global powerhouse, now protecting hundreds of thousands of organizations worldwide. Their mission is simple, yet critical: to secure the digital world and enable businesses to operate safely in an increasingly connected environment. At the heart of Fortinet's offering is the Security Fabric, a comprehensive and integrated platform designed to protect entire networks, from sprawling data centers to the laptops and smartphones of individual employees. This platform brings together advanced firewalls, endpoint protection, secure access, and cloud security, all working seamlessly to defend against a constantly changing threat landscape. Fortinet's unified platform approach not only simplifies security management for IT teams, but also enhances overall protection by allowing different security tools to communicate and coordinate. This creates a sticky customer relationship, as clients benefit from a single integrated solution rather than juggling multiple vendors and products. The result is greater efficiency, lower costs, and a higher level of trust in Fortinet's capabilities. The demand for cybersecurity is a secular growth story, driven by the relentless rise in cyber threats. Every year, attacks become more sophisticated, targeting everything from small businesses to critical infrastructure. Ransomware, phishing, and data breaches are now daily headlines, making robust security solutions not just a luxury, but a necessity for organizations of all sizes. The global shift to remote and hybrid work has only accelerated this trend. With employees accessing sensitive data from home, coffee shops, and virtually anywhere, the attack surface has expanded dramatically. Fortinet's solutions are particularly well suited for this new reality, offering secure connectivity, endpoint protection, and cloud security that keep data and applications safe no matter where work happens. Financially, Fortinet stands out among its peers. The company is highly profitable, consistently delivering strong revenue growth and expanding profit margins. Over the past several years, Fortinet has demonstrated its ability to scale efficiently, turning increased sales into even greater profits. This financial strength gives the company the flexibility to invest in innovation and pursue new opportunities. Fortinet's business model is a powerful combination of hardware sales, such as their popular FortiGate firewalls, and high-margin subscription services. These services include ongoing security updates, threat intelligence, and cloud-based management tools, providing customers with continuous protection and peace of mind. This recurring revenue stream adds stability and predictability to Fortinet's financials, making it less vulnerable to economic cycles. Fortinet is a leader in cybersecurity with a market cap of $64.87 billion. The stock trades at a PE of 33.73 on EPS of 2.51, pairing growth expectations with consistent execution. Revenue for 2024 came in at $595 billion, and net income reached $1.74 billion, underscoring a model that converts network security demand into strong bottom-line results. With a strong balance sheet and robust cash flow, Fortinet is able to self-fund its growth initiatives and invest heavily in research and development. This commitment to innovation ensures that Fortinet stays ahead of emerging threats and continues to deliver cutting-edge solutions to its customers. The company's R&D teams are constantly working on new technologies, from artificial intelligence-driven threat detection to advanced cloud security tools. Another key strength is Fortinet's founder-led management. CEO Ken Xie, who co-founded the company, brings a long-term perspective and deep understanding of the cybersecurity market. His vision and leadership have been instrumental in guiding Fortinet through multiple technology shifts and competitive challenges, ensuring the company remains focused on sustainable growth and innovation. Of course, no company operates without risks. The cybersecurity market is fiercely competitive, with major players like Palo Alto Networks, Cisco, and Check Point all vying for market share. These rivals are constantly innovating, and any misstep by Fortinet could result in lost customers or slower growth. Staying ahead requires relentless focus and continuous improvement. Economic downturns also pose a risk, as companies may tighten IT budgets during tough times. However, cybersecurity spending has proven to be relatively resilient, as organizations simply cannot afford to leave themselves exposed to attacks. In fact, During periods of uncertainty, the need for robust security often becomes even more apparent. When it comes to valuation, Fortinet trades at a premium, reflecting its high quality, consistent growth, and strong market position. Investors should be aware that much of the company's future growth is already priced into the stock, so continued execution and innovation will be key to justifying its valuation over the long term. The unstoppable trend of digital transformation is reshaping the global economy, driving demand for secure, reliable, and scalable cybersecurity solutions. As more businesses migrate to the cloud, adopt IoT devices, and embrace remote work, the need for Fortinet's products and services will only grow. The company is well positioned to benefit from these powerful tailwinds. One of Fortinet's key differentiators is its focus on integrating networking and security into a single, unified system. This approach not only improves performance and reduces complexity for customers, but also sets Fortinet apart from competitors who offer piecemeal solutions. By delivering both speed and security, Fortinet helps organizations operate more efficiently and confidently in a digital world. Fortinet's broad presence across multiple market segments, from small businesses to large enterprises and government agencies, provides both stability and significant growth opportunities. The company's global reach and diverse customer base help insulate it from regional slowdowns and allow it to capture emerging opportunities around the world. In summary, investing in Fortinet is a bet on the continued and growing importance of cybersecurity in our digital age, and on the company's ability to innovate, execute, and capture market share in a rapidly changing landscape. For investors seeking exposure to a critical, high-growth sector, Fortinet stands out as a compelling choice. So, there you have it. 3 companies with powerful growth stories. DraftKings offers a high-risk, high-reward play on legalized sports betting. Tencent presents a deep value opportunity for contrarian investors. Fortinet is a profitable cybersecurity leader building essential digital infrastructure. Each company operates in a massive, growing market with a clear expansion path. Do your own research before investing, and ensure alignment with your financial goals. Which growth stock do you think has the most potential? Share your thoughts in the comments. Thanks for watching, and I'll see you in the next one.